Good morning, everybody. Hope you're all good, man. Um, another day. Today's Monday. About to get market open in like 7 minutes. 7 minutes less. I already did some markups already. On the charts earlier on when I was just checking what the market was doing. Um, but as you guys can see, we've just been consolidating so far this morning. Just hold on. Do not disturb. Okay. So, of course, you guys know Mondays. I don't really trade. I don't look at the charts or anything. Not look at the charts, sorry, that's the wrong word. I look at the charts, I just don't trade. Try to figure out the direction of the week and see how the market's gonna move. Pre-market already had marked this as the London low, but it already swiped that over here, as you guys can see that. So this is that new London low right over here. So I just have to adjust this real quick. Hope you guys had a great weekend. Hope you guys found value into that weekly review that I made. I still need to go probably watch back at it. Like I said, I like watching back at my videos to learn and to see improvement and stuff like that. You know. Um, yeah. Like I said, this is more for me than it is for you at the end of the day. So whether you watch it or not, that's in you, bro. Um, we have no news today. So no news Monday, so the market might be a bit iffy, or lackluster, or moving weird. Um, we have news tomorrow. We have CPI, and then we have Wednesday again. PPI. Wait, let me see something. Okay. PPI. We have Thursday, retail claims, and then Friday. There's no news on Friday. So it looks like it's gonna be a great week, to be honest, because there's no 10 o'clock news, but there's news at 8:30, and usually that helps with the volatility of market open at 9:30. So yeah, hopefully we can catch good trades, if not no trades, if not losses, God forbid on that one, but it's part of the game, of course. Yeah, let's just see what this Monday has for us. Price has just been consolidating so far, nothing crazy. We have these two lows right here. I think this is like Tokyo or something. Let me see. Let me show you guys. Oh, Sydney and Tokyo high, and then we had that Sydney low right there. We have like this big price has not broken this range. We've just been consolidating in all of that. So let's see what market wants to do. We have put on a 50-minute real quick. You can see price is just consolidating, right? So we want to see which direction price wants to go today. Well, there isn't really much to work with here, as you guys can see, but we have this fair value gap right over here, this one, and I think there's an auto block. Not I think, I kind of know that's an auto block. So yeah, we have this 15-minute fair value gap. Let me just mark that out for you guys so you guys can see. That's a gap. That's a gap. As you guys can see, that price respected the midpoint of that right over here. They show respecting the midpoint of that fair value gap. Let me just make it like gray. Yeah, let's just make it very light. We have this 50-minute fair value gap. I'm gonna probably remove this. I don't want to see it on the chart really, but I'm just showing you guys where this 50-minute fair value gap right over here. Price would have like probably stopped you out if you had tried to use it over there. But we're talking about it. Let me see. I want to see if this is touching. Not touching. Small. Put him in balance. Yeah. As you guys can wait, flip. As you guys can see, we had a candlestick break above it, respecting the midpoint. The bodies are respecting the midpoint of this fair value gap. So if we were to see sales today, if you want to see a body break above this, below this, sorry, below this, probably have like a retest, and then we can sell down. And then what I'm looking at is obviously I would not look at this fair value gap. I will look at this one because this one has that first fair value gap of the 8th of May. Or just by the way, my bias for the if we were to sell, I'm just showing you what I want to see to sell. Um this we have this fair value gap right over here, this 50-minute fair value gap. But obviously interest is gonna be this first fair value gap on the 1 minute, right? So if price were to come all the way down here and probably if not react off it and just have a retracement back to the upside, I'll be looking at this. If not disrespecting this, coming all the way down, using this to take out, to come all the way down to this. And also we have that midpoint that we left intact. Price did not close this opening range gap. So we have that midpoint. So we have like two biases. So if it were to run through this, looking at these two, and obviously we have that new week opening gap, these two, and that midpoint of that is this, the event horizon right over here. So this is like attracting, this is a nice area for price to come and play around at. But obviously we're overextended, we're all the way up here. But like I said, if I want to see sells, I would really like to see price break through this and respect, yeah, to have a body a candlestick close below this 50-minute fair value gap. And then obviously if we want that bias of buys, price is respecting this midpoint. It's been respecting this point since the London session. All these sessions it's been respecting this midpoint, struggling to break through this value gap, showing us that it's still bullish. So if you want to see price disrespect this fair value gap, I mean to continue obviously respecting it, probably like just sweep out this low, right? Probably just sweep out the low and respecting the midpoint. If as long as you have a body having a reaction respecting that midpoint, then we know that price wants to buy. And this is market open right now. Oh my days. I'll fix that. I was just talking. I forgot about the time. And yeah, so obviously now you guys can see we before market open that just at the pre-market at 8:45 we respected this midpoint. So we can see if we're gonna get higher prices because price is respecting the midpoint of this. We have this fair value gap right over here and price disrespected that. But yeah, we have this value gap over here, but obviously you guys can see prices running through, literally running through. And we have this big one as well over here. So let's see how price reacts to that as well. But yeah, that's basically it for me. That's what I want to see. If we were to buy like we are right now, we're respecting this 15-minute fair value gap, the upper half of it, and the bodies. Once we broke through, the bodies are respecting that end dog low. No new end walk or the new week opening gap. The bodies are staying above that, so that's a good sign that price wants to probably continue going up. So let's see how this day goes. Of course, let's see how we're gonna sweep out that London high that we have. So yeah, that's my analysis. I told you if I were to see buy if we're buying what I want to see, if we're selling what I do want to see, and we close this opening range gap. So this is the high, and this is our low. So depending how this closes, this could be our first fair value gap. It's gonna be a big one though. But yeah, that's gonna be our first fair value gap. Um, we had uh we had this new week opening range gap. Sorry, we had this opening range gap, but price obviously I closed that, closed the gap. But I'll just leave the midpoint. It's probably used to seeing that. I'm just gonna put it down here. You guys can see that midpoint. Opening range gap, midpoint, center. There you go. And this is our first value gap. And we took our primary buy side, we took our London high. Now we're at all-time highs again. Yeah. Not surprised. I mean, we respected this 15-minute fair value gap right over here. The upper half, upper half, upper half. Yes, we've gone through it, but we've been respecting that upper half. And like I said, if we see it respecting this upper half, like we did pre-market open, that pre-New York open, seeing that price respecting that upper half, it's been going up. So today could just be another day of just buys. I'm just gonna put this here. So our first fair value gap of the day and the week, first fair value gap. Today's the 11th. First fair value gap, 11th. Nice. Yeah, that's basically it. So now we just let it play out. Change the color. Say we are like nice blue. It's that 5-minute candle. You guys can see that structure there. Splitting it up by half. Yeah, man. Let's see who's probably gonna want to come back and use this for value gap. Expecting this upper half of it. If not, like I said, sells below it. But upper half buys. Well, it could have been like a Judah swing. It's like, damn, this is like how many pips? We market open went over 130 pips. That's Nasdaq, man. Took out that primary, the London high, and the primary buy side. So let's see how price reacts to this for value gap. Oh, forgot. Okay, yes, that has these highs right there. You see how price gonna cheat this opening range gap, this price. We don't, like I said, we don't count this with value gap because this does not exist on that first fair value gap. So I'll react to that midpoint. If you wanted to go long, maybe using this, I would wait for, but problem is this for value gap. That's the thing. See this big for value gap, but I would say you wait for the a body to leave and then retest it. But like you see now, we're using this for value gap right here. This big one. We want to see a body leave this. We want to see a body leave this first value gap, and then we can have like a retest, just touching back inside. That would be like our entry for shorts. Maybe the London low right here, this primary sell side, because we already swept. Sorry, because we already swept this London high. So if the London high swept, we're gonna see the London low is gonna get swept as well. We're gonna have a probably reaction here on this opening range gap. So let's see. We have that reaction. Because remember the opening range gap, high and low, sensitive price points. Let's see. Oh, and we have and we have the new week opening gap high. That can also be a bit of like a resistance to price. This making price wanna. So if we keep seeing price wanna respect this opening range gap, then we know like okay, it probably wants to go higher, right? Because now so far we had a reaction on the opening range gap high, right? And there's no bodies leaving that first for value gap. There's no bodies. It's just wicks doing the damage. Wicks doing the damage and using this for value gap right here, right? And now if you were to go and buy this, right? My only concern would be this for value gap. But if we know like okay, probably just gonna continue going higher, I wanna see a body leave this and retest it. But like I said, you wanna see how this price reacts to all of this mess right here. There's also a big fair value gap, to be fair. It's like what? 36 pips. Let's see. There's no body yet. Prices, you see, there's also no bodies leaving this fair value gap, right? Nothing. But the wicks are doing the damage in the sense of what? Coming into this fair value gap and staying at the lower half of it. Obviously, you're like, okay, come on. This is the lower half. Staying at the lower half of that fair value gap. No, this is the fair value gap, lower half. But like I said, if you just have to be patient and wait for price to tell you what it wants to see. If you wanna buy, you wanna see your body leave. If you wanna sell, you wanna see your body leave, retest, body leave, retest. Sometimes when the body leaves, you'll not get a retest, which is sometimes the best ones. Where I know some people that would trade in a sense of like the moment they see the body leave, they'll just enter the trade because sometimes you just don't get that retest that you want because price is just gonna move so fast, and sometimes when you don't see a retest, it's a good thing because price is gonna like move towards that direction, you know what I mean? And yeah, so sometimes for me the retest is just sometimes best, but I've also seen good results of not waiting for that retest. When we just see a nice body leave and we get no retest, good for buys. So yeah, let's see what price wants to do. Look at that 5 minute. What's going on here? I'm looking at this. Come on. SP 500 taking out that high. Let's see. We had a body that leaves. Let's see, it's gonna come back inside and retest it, and then we want to see price go higher and probably take out this minor. I can remove these. Okay, I'm gonna leave them just for a little bit more. So you guys just we have this minor. There you go. Retesting it. Sometimes when you retest, it could go as far as coming back to the midpoint, right? And then the wick doing that damage, coming back to that midpoint. We have this minor. So now we want to see price go higher. Minor buy side. Let's see. Will price go higher? Remember, we have like a bit of, I want to call it a barrier, but a barrier because we have this fair value gap right over here. But we shouldn't worry about that right now. Want to see will price come take out this minor buy side. So I would have gone for buys right over here. So this could be like a trade idea. Longs, waiting for it to come while it's coming down, retesting that. Stop loss there. If not, you could use this candlestick, but for safety, because it's gonna be a big I'll say 125. If not, just keep it at 100. Say 100. That could be a nice trade idea. This, a nice trade idea. We'll check on that. I'm just gonna delete it for now. But yeah, but first TP, I would say take this. Moment price takes out this minor buy side, that would be your first TP. It's kind of small, but can make it work. We have that midpoint here. Somewhere you guys can see that we're above that midpoint. So you want to see price come all the way above here. We're not respecting that midpoint. Clean, simple. Yeah, let's just wait and see. I'm gonna remove these now. This London high and this primary buy side that we had. I'm gonna delete that just to keep the chart a little bit clean. So yeah, let's let it play out. We have the macro. Um, we have the macro in 3 minutes. We have the macro in 3 minutes. Uh, let's just see how prices and also react of that. I don't know. I feel like I'm at a stage where I could remove the lines for the macro, like just to avoid having so many lines. I don't know. I'll see. Oh, another thing. If, for example, we had entered this trade right here, we want to see price respect this upper half of the. Sorry, there's a bit of noise. Hold on. Okay. You want to see price respect this upper half of this fair value gap. I mean, of this, the first fair value gap. So if you're gonna be stressing about drawdown, don't worry about that. It's part of the game, it's part of the heat. And also we have this fair value gap right here. So you wouldn't be surprised if price came back and came to retest this. Let's just make it white so you guys can see this fair value gap come back and retest this fair value gap and respect the upper half of this fair value gap and the upper half of this fair value gap. Hence, for that said, you could have put your stop loss. Okay, we have entered like while I was doing that. You could put your stop loss either here. If you wanna be like on the safe side, I'll just put it like there. Want to be on the safe side, not want to risk much, and then your first TP obviously is gonna be right over here. If not, you're gonna just be like on the safe side because the wicks can do the damage. You could leave it for all the way here. This way, value at that end of that, right over there, right? If you wanna be on the safe, or if you wanna be more risk on. So yeah, but if you were to leave it like this, I wouldn't always suggest take TP here because I mean the risk reward. Look at that. It's honestly not much. It's not worth it. But if you want like a quick scalp, like you know what, I think it's gonna go there, and you wanna risk too much, you put it there, right? The worst that could happen in this scenario is that it could obviously you want to see it respect this upper half, right? This upper half of this fair value gap. Worst case scenario, this stop loss is so close to the midpoint of that, and a wick could just come and do the damage, stop you out. Like a wick could literally just come all the way down, sweep out this low, sweep out this low. Hell, even leave this fair value gap just to come and retest this all again, and then come back up and leave a body. Trying to find my words and leave a body just below that. So hence for them saying sometimes it's just best if depending on your risk management, of course, and how much you are willing to risk. That is it, right? As you guys can see, respecting that midpoint there, you want to just see prices go up. You want to see it leave. But yeah, like I said, um, you want to see it. The wick can do the damage and just stop you out of that. Like now, we would have been in drawdown. You guys can see we came back right at that midpoint. I want you guys to see that. Damn, not all of them. You know what? It's fine. You won't be able to see that either way. Okay, right at that midpoint, you see that, and you would have been stopped out right over there. You would have been stopped out. Whoa, it's a big jump. It's a very big jump. That's a very big jump. But yeah, you would have been stopped out. Good trade idea though. Say see this value gap could be a problem. This one. Let's see if we had played with the scenario of leaving your stop loss all the way down here, would that have panned out? But oh wait, it's gonna use this as an inverse. Let me show you guys real quick. You see this? It left this fair value gap. You see this one? It left it as a body and coming right back into it to retest it. Let's see, we're gonna get lower prices. To be honest, sales make more sense because we already swept the London high and that primary buy side that I had, the Tokyo and the Sydney high, we already swept that out. So I know it's not about what I want to see, but what would be ideal for price is to come and take out this London low, and this probably this primary sell side, but ideally the London low because that's our target if it takes out the London high, right? Because the entire bias of this is if the candlestick left that body and retesting it, of course. Um, but now yeah, you see that came to retest that upper half again. You see that? So now you want to see if we can have a body that leaves this retested and leave. But most importantly, like I said, we gotta wait for the macro. And we are in the macro. Let me show you guys. I'm paying attention. Now we're in the macro right now. And during the macro, price left this fair value gap. That first minute it left and came and retested multiple times, making this an inverse fair value gap. So we're probably gonna have a candlestick, a body that closes. I want to see a body. I want to see hopefully this body, this candlestick, sorry, closes. If it doesn't retest, we want to see it come all the way down. Take this, that London low. That's what I want to see. Probably gonna have a reaction of this. Use this as an inverse. So during the macro, price use this inverse fair value gap. Oh, by the way, this is why I wait for the macro, bro. The macro, bro, will save you from making so many mistakes. But imagine being so frustrated of taking this buy and then losing that, and then next thing you know, selling. But anyway, uh, we in the macro, price use this fair value gap. So this is another nice short. I'll show you guys a trade idea. It left, came back just by that candlestick right over there. And I would say TP1 this low right over here, TP2 that London, and in the third position I would leave running this, oh damn, this primary sell side right over here. So we use this as an inverse fair value gap during the macro. So now we have this fair value gap during the macro, this one. You want to see if price is gonna, but if price can come back to this fair value gap, or if it's gonna come back to that first fair value gap, probably have a retest and then sell. So if not, this could be like our breakaway gap and price leaves it open, which is like a good thing as well. And then it's telling us that price is bearish. So let's see this fair value gap. We tapped into that, so you probably could have gone if you had missed. Oh damn! Wait, if you had missed this, if you had missed this, you could use this using that fair value gap, but be wary of that first one. But yeah, you could have used this as an entry as well. Oh damn! Oh yeah. Anyway, I see shorts, but I'm gonna leave it up here. Like I said, I'm not in any trade. This is the live market. I'm not in any trade. Like I said, we're just analyzing and just talking about some trade ideas. Or some trade ideas. What I would have done, basically. So that first trade idea was a loss. That first one would have been a loss. Second trade idea. I'm more confident about this one because of the micro times, of course. Um, but as you guys probably all know, I'm a big believer. I just prefer. I only trade outside of the micro times if I'm super confident about direction and I know that okay, this is what's gonna happen. And if I got multiple confirmations before that, but if I'm not certain about where price might go and stuff like that. Oh, wait, we're respecting this upper half of this opening range gap. You guys see that? Want to see what price is gonna do. I actually want to see it retest this first value gap. Not gonna lie, it would be nice. We went back into this for value gap again. See drop. Yeah. Like I said, like only when I'm super confident. When I'm super confident, then I'll go into the trade before the macro. But usually, I would wait for the macro to pass. I mean, to come by, and then I will take a trade. If I am uncertain, I know where price is most likely to go, but then the macro just gives me that a cleaner setup of like where it goes. Sometimes the macro does not give you the setup, a clean setup. It could just, because remember, a macro is the time where price is gonna go for liquidity, old liquidity, which is like old highs or old lows, or go to fully inefficiencies, your fair value gaps. um well, there's an inefficient that I don't know, the fair value, your fair value gaps. Example, like during this macro time, price came back into this inefficiency, this fair value gap, as you guys can see that, and use this as an inverse. Had a body leave respecting the upper half, had another retest, right? So yeah, that's basically it. um that's why sometimes you can miss out on trades during the macro, um which sucks. I'm not gonna lie. There are times I missed good setups where I could have entered before the macro, and then nothing had happened. And there are times where I just been patient during the macro. I get a cleaner setup, you know. So yeah, that's basically it. And sometimes macros can help you get into moves that you thought you have missed. Maybe like I say, a long extended move where price was just like moving crazy, right? Like let's just say we had a trend where it's just a selling trend, and obviously on a trend like that, you just don't know where price is going to reverse, and then just being a little bit more patient. And I remember I journaled this once saying that I would feel like price left me, but it didn't. Like just being patient and waiting for that macro, it will go back to the inefficiency, a premium or discount inefficiency, and then, well, you want a discount inefficiency, not a premium. You wanna sell it. You wanna wait. Let me think. You want to take, obviously take a trade in like at a discount, and price would just give me just that, and then selling or buying, whatever the case is in that sense. We went back again into this, but the bodies are staying below this opening range gap high. They're staying below. Probably gonna retest this first for value gap, and we had a reaction on that opening range gap below, right over there. Nice, but yeah, that's basically it. So sometimes waiting for the macro, it's a blessing and a curse. Test your patience though. Not gonna lie. We are back inside that first fair value gap. Let's see if this candlestick is gonna leave a body, or we're gonna have a nice retracement. Damn, this is so bad. On my days. We're coming back into this and close to the upper half of that. Let me just remove this. You guys can see the stop loss would have been, let's just say, like up here, and no TPs would have been hit. Let's just bear that in mind, because I said my first TP would have been here, second TP here, third here. No TPs. This is kind of good because it's kind of showing you why I don't trade low key on Mondays. But I'm not confident about this, and let's see how it pans out. A little bit. Let's see, respecting that upper half, we almost got back into this, but we just fell short right over there. But this is not enough. But yeah, this was Kodoki showing you like Mondays, why Mondays are a bit of a, can be a bit of a problem. Yeah. Part of me is like, this is why you don't trade on Mondays, bro. My heart would have been on my. Oh wait, we have this 5 minute for value gap, but this doesn't matter. I want to see price respect this upper half. That's the important thing right here. The upper half. Oh, can you guys see that? We got the new week opening gap midpoint, having a reaction off that midpoint. So this is probably gonna go above it. Or if we were to buy, we're probably gonna see go above it. You see that we're having a nice reaction of this gap, basically. Price coming back, respecting that gap, the midpoint of that gap, displacing higher. Hmm, interesting. Did you find it interesting? Come on, bro. Respect the upper half. Dun, 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 dun. Okay, doing some back and forth right there. Dun, dun, dun. Went back, touching into that. The upper half, guys. That's what we want to see. Want to see price respect the upper half. What's going on here? Hmm. Stopping at the midpoint, it's giving me a red flag. I'm not gonna lie. A big one. My spidey senses are tingling. It's not a good thing, bro. Okay, right now we will be in drawdown because the stop loss is right over here. Right over here. I dream things gonna get hit because of this. Look at that, bro. To the take. Can't make that up. Yeah. Can't make that up. And I bet you at the last minute of the macro, this same setup, this will probably play out probably now. Properly, sorry. Um, oh, as you know, I'm gonna hop off after the macro. I'm gonna be off the charts. And I'm gonna see you guys tomorrow. Mm, 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 mm. Body left right over there. Come back. But wait, we have this value gap right over here. You see that? This one. But it doesn't matter right now. It would have been stopped out. You see that? Because we use this. Let me show you guys. My days. Uh, we want to see the respect this upper high if it's gonna go higher. I would have been stopped away, bro. It would have been stopped out right over there. Damn. Yeah, because I said first TP, this, this. Yeah, would have gotten stopped out. There's this small fair value gap over there, but I think we're about to suspect that. Let me see. Whoa, expecting that upper half. So during the micro price came back into this inefficiency, expecting that upper half of it. But I think there might be like a little bit of a back and forth here. I'm just gonna remove this because it's gonna just add some confusion to me. We are at the last minute of the macro. Let's see what happens, and then I'm gonna hop off. I think I'm gonna name this title "Why I Don't Trade Mondays." Actually, yeah, that is the title. Why I don't trade Mondays. Why I don't trade Mondays. I'm a billionaire. I'm like, I don't care. Hmm. Yeah, bro, we would have lost two trades today, bro. Not worth it if you ask me. I'm gonna be on for like 3 more minutes, bro. I'm just gonna hop off. Okay, my final analysis on all of this. I think we're gonna continue buying for the day. Um, yeah, probably pricing out this minor buy side. I think we're gonna continue buying for the rest of the day. If not, like probably retrace like later on during the afternoon session. But I do think price is gonna probably take out this minor buy side solely because not solely because, but because of this and showing like the willingness it doesn't want to come down. Like I said, remember that thing I told you about this 15-minute fair value gap when I was analyzing everything. Um, yeah. So the first trade, which was this one, wouldn't have worked out. Second trade, which was this one, would have been good profit, but wouldn't have worked out. Price reacted perfectly off that new week opening new week opening gap. I think I spoke about this. I think it was either Thursday or Friday, where I was like, I'd rather see price first come down and react of the midpoint instead of the new day. It was the it wasn't a new it wasn't a new week one, it was a new day. And it actually just reacted off the new day. Yeah, but this one of that new week opening at the midpoint perfectly at that, touching that opening range gap, going higher, leaving that, coming back, almost touching that, coming back to retouch this opening range gap high and went higher. And then yeah. So yeah, that's it for me, man. I'm done. I'm gonna hop off now. See you guys tomorrow. Hopefully tomorrow you can get some nice trading opportunities. I think what we just did today, we got rid of the losses. I hope so. But um yeah, yeah. I'm happy, of course, didn't lose money, didn't hurt myself. And also sometimes I see it as not sometimes, I see it as practice as well on a Monday, not trading and just analyzing to see if my gears right, you know. But today I would have been hurt twice. Um yeah, I would have been hurt twice. And most always just like it just shows me on why I shouldn't be trading on a Monday. Um and also like the price is just whack, like it's just back and forth and there was no news. So thank you guys for tuning in. I'm gonna see you guys tomorrow. Cheers.